The Federal Reserve can create billions of dollars out of thin air, no money printer and no gold backing needed. And yet, this money is real enough to buy your house or to buy stocks or even cryptocurrencies. So in the next few minutes, I will reveal how this seemingly impossible system actually works. And more importantly, what it means for your wallet, your trading, and your investing. But all right, so let's begin here by answering the very important question, what is the Federal Reserve? And in simple terms, the Federal Reserve, also known as the Fed, is the central bank of the United States. The Federal Reserve was created in 1913 to help stabilize the economy. And this is very important. The Federal Reserve is definitely not a normal bank, and you will learn all about it in this video, why this is the case. And another important thing I can mention right away is that the Federal Reserve doesn't print physical cash anymore. I really like to use that as a metaphor that the Federal Reserve is printing money, but you will learn really soon how this actually works. But right, so now what are the main goals of the Federal Reserve? Well, I would say the most important goal is to control inflation. Or in other words, this basically means to keep the prices stable. I think that the Federal Reserve aims to have around 2% inflation, meaning that the prices increase with around 2% every year. So if inflation rises, this is something bad, and it can also actually be bad if inflation goes far below 2%. So that's one of their goals. Another key goal here is to support employment, so to help create jobs and help maintain high employment, and also very important to help the financial system, keeping the financial system steady, and also to step in if we see a stock market crash. This is very important. But all right, so now let's take a look at how the Federal Reserve works. And here, this is something that I feel like pretty much most people have no clue how the Federal Reserve works. But if you can just watch this short video, I'm sure you will, know more than, I would say 99.9% of people how the Federal Reserve works, at least if I do my job and explain this in a good way. You can, of course, let me know in the comments what you think. But here, the Federal Reserve uses several powerful tools to guide and steer the economy. The first tool, and one of the most important ones, is interest rates. And this is also the tool that I think is easiest to understand when it comes to the Federal Reserve. So the Fed sets a key interest rate called the federal funds rate that influences loan rates all across the entire economy. So when the Federal Reserve raises interest rates, this will, in turn affect all types of loans, like mortgage loans, car loans, basically all kinds of loans in the entire economy. So, and in simple terms, lower rates means that it's cheaper to borrow money. It's cheaper to get access to money, leading to more spending and investing, leading to a boost in the economy. And in general, higher rates is the opposite. Money gets more expensive, this slows spending, which can be used to basically fight inflation. That is why you will often see the Federal Reserve raising interest rates if they prioritize to bring down inflation. But now the second tool the Federal Reserve use is buying and selling bonds. This is also known as the open market operations. And this part can definitely be, a little bit tricky to understand, but I will try my very best to explain it. So this is actually the sort of main method how the Federal Reserve prints money without actually printing money. So how does this even work? Well, in simple terms, the Federal Reserve buys and sells treasury bonds. And they do this to control how much money is in the economy. And before you dive into this explanation, or after this video, I actually highly recommend to check out this video right here. This is a video where I go over step by step how bonds, like US Treasury bonds, work, and this will really help you understand this explanation. So if you want to, feel free to pause the video, watch that one, and come back. But if not, let's continue right here. So what happens when the Federal Reserve buys a bond? Well, when the Federal Reserve buys a bond, it first creates new money. So it basically creates this money out of thin air. It has the authority to do this. It just types in their computer, I want to create money. And then it buys bonds from other banks or investors. And this is how the money flows into the system. This adds money to the system, which, lower interest rates and encourage more lending and so on and so on. And this is important. This right here is a trade. So the Federal Reserve, let's say we have the Fed right here, it trades cash. So it trades money for a bond. So this can be bonds that, for example, let's say we have a bank on the other side. So the bank gives the bond to Fed, and the Fed gives money to the bank. This is just an example, but this is a way of how the money can flow into the system. But now then, what happens when the Fed sells bonds? And this, in my opinion, can be even harder to understand. But in simple terms, when the Federal Reserve sells the bond it owns, then it's the investors or the bank and so on that gives the money to the Federal Reserve, right? So this is actually a way to remove money from the system. And less money in the system equals higher rates, slower borrowing, and so on and so on. So the key takeaway here is that Fed can create money to buy bonds, and that's how it injects cash into the economy. And it basically uses these tools not to profit. The Fed can't really profit, but its main goal is to just steer the economy. All right, so last but definitely not least here, we have to, of course, mention quantitative easing, or for short QE. If you invested or traded during the COVID crash, you're definitely familiar with this term. But what does it actually mean? Well, in very simplified way, we can think about quantitative easing. It's like when Fed is buying bonds on a massive scale. And this is something that the Federal Reserve uses in crisis situations. Like, for example, as I mentioned, the COVID crash. So quantitative easing is when the Fed creates large amount of money to buy long-term bonds. So this is when Fed really thinks the economy might be in danger. So we quickly need to put out lots of money into the system. So this tends to push long-term interest rates down and support the economy when other tools, like, for example, interest rates or normal open market operations, are not, doing enough. But all right, so now then, we of course have to talk about money printing. What does money printing actually mean? What do I mean when I talk about money printing? Well, here, the reality is that we live in a digital world, and nowadays, money printing is mostly digital. So the Fed, quote unquote, prints money, right? By creating new dollars in the system. It's not necessarily, turning on a physical printing press. So it basically pays for bonds by typing new money into bank accounts. And this is as simple as changing numbers in a computer database. So it's not, it's basically just typing on a keyboard, and just like that, they create billions. And here, most money in our economy today is digital, not paper. So here's just a short fact. Today, around 11% of the total US money supply is physical cash. The rest is purely electronic. But alright guys, so now I can see that this video is getting a bit on the longer side. I still do have some topics that I want to cover. What happens when the Fed creates money? How does money printing affect you? And so on, and some more interesting facts. But I do think I will save the rest of this presentation for our YouTube channel members. If you guys didn't know, we have an amazing community right here on YouTube. And by joining, you can get access to, for example, presentations like this one. And you will also get access to exclusive videos, emojis, replies, all that good stuff. And at the same time, you support my work. So if you want to get access to this presentation and much, much more, please consider becoming a channel member by clicking the join button down below. And now guys, in order to really understand money creation and the Federal Reserve, you need to understand how the bond market works. So if you have the time, I highly recommend to check out this video next.